time, I just want to show this little trade here. So this is just the morning trade. Now, let me set the preface. This is the S&P.
Mm-hmm.
So here's yesterday's action. Then we have today's test that came in from the top, sells it down, creates value, and it's either going to accept or reject. It's either going to trade back or it's going to continue, right? We don't know.
Mm-hmm.
We have to wait for the rejection. So as the market is working through that process, comes down, tests the value area low. Okay, oops, excuse me. Test the value area low. Once it tests the value area low, what are we looking for? We're looking for that imbalance move, that just basically price action, to show that buyers from here trying to step in here. Okay, so do we react to this based off our discussion today?
Well, we first watch and see what happens.
There you go. There you go. You just watch and see.
We cannot just blindly jump into it.
Just blindly jump in. Otherwise,
confirmation.
There you go. If you jump in here, that's emotional, right?
Exactly.
That's the FOMO, fear of missing out. Oh my God, I better get up. And all of a sudden, as soon as you do, you get tested.
Yeah.
And then you're out, you're in, you're out with a loss. Then worst case is you short it again. And all of a sudden the buyers come in and that's your opportunity. So trap, long, back to a level. Okay. So that's how this is all set up. So now we're going to take a look at this. So here's the value area. There's a red line is the value area low. Okay.
Okay.
So we came in at 11 o'clock. We come in, there says trap here. So sequential decline, there's a buyer starting to show up. They're starting to show up. They trade lower, potential trap, potential. So we're at 99. So here's the value area. I'm sorry, the value area low is 27.98. This is the low of the day. Low of the day is 27.95, but the value area low is 27.98.
Okay.
Okay. So so the low is actually, this is this part. Here's the actual low, low of the day, but here's the value area low.
Okay.
Okay. So short-term low. Now this is a structured low. So I'm looking, how is everything now coming in after we're flirting with the value area low, the trap of the value area low?
Okay.
Doesn't look like it's going to go full screen for me.
Okay.
Okay.
I mean, I can still see it. It's no problem.
Okay. All right, good. So that's what we're doing. So we can see here, here's a volume point of control at 2804 on this pink.
Yeah.
Okay. So we're looking to trade in that direction. So here's the imbalances that are happening in here, keeping track. So what has to happen after we start moving up is we have to wait for that test of sellers. So this box here is a filtered tape. I'm waiting for the seller to come in. Let's see what happens. So there's nothing there. This is a filtered block trade. Waiting and waiting. I'm still not in. Okay, no, I do get in. I anticipate, but I only get in with one contract. And I'm anticipating that this auction here, these sellers, I'm anticipating that the buyers are going, since we're above and kind of in line with these sellers, it's kind of acting as support. So I want to see a seller. Okay, pause. See that seller? 73 at 99.75?
Yeah.
That happened right here, right? So
Okay,
price
yeah.
came down beneath that. Now, and I'm still one contract, down $25. In order for me to add, I want to see price trade up and around this seller of 99.75.
In order to absorb his volume.
That's correct. That's correct. You see there's a seller here. There's a sale and a buy. There's a buy of 189. There's a sale of 73, but yet price fell versus this larger buy, price went up. So in order for this sale to happen, this is basically a crossed trade. The buy to happen, someone had to sell.
Correct.
Okay. So if we can clear that is when I can start to add. So we're back up to 2,800. We're sitting at 99.75. That's where I can start to add. And what I'm doing now is I'm setting my stop. I'm anticipating now that more buys will come in versus more sales. So if I'm in and more sales start hitting and price starts falling, I get out. I don't wait till this stop happens. This is just like a safety net. I would literally, if I saw a bunch of sales come through now and price start to come down, I would close it and take the loss. Okay. So I'm anticipating buys coming in. They haven't come in yet, but I'm anticipating it based off of the possible rejection of that value area low.
Yeah. Okay.
So working with these current buys and sales, the imbalances, keeping an eye here. Adjusting my risk. That's my safety net. Okay, so a sale did come in at 2,800. So it came in here at 2,800, but also immediately, well, not immediately, 1428 and then 1431. 3 minutes later, this came in. So if within that 3 minutes, the 28 would have happened and then it traded down, I would have closed it.
Okay.
But instead, 3 minutes came by, a buy came in. Still anticipating more buys, of course. I can see that the sellers are still here. They're still here. Another buy came in at 2,800. Price up, tick, that's good. That's confirmation. At some point, I'm waiting for the sellers to give up. More buyers came in.
More buyers.
Now they pay. Now notice how they're starting to pay up a little bit. So first buy was what? 99.75 down here, right?
Right.
So that's why I'm hiding behind 99.75. Not only was there buy there, but it was also tested. So I'm hiding behind it. Then, so the net buy is at 99.75. Then they bought at 800. Then they bought at 850. Now I'm just waiting for the sellers to give up and the release of the trade.
Giving up by the less and less of the red numbers on the far right would be diminishing, right?
Right. Right.
Okay.
Still not clear. It's still not, they still haven't given up. They still keep coming in. Still keep coming in. Now I'm at risk, actually, because this volume point of control on the day was up
has
here.
moved down.
It moved down, right?
Okay.
So I'm at risk. I'm at risk that this thing just goes straight down from here.
So would you close out the trade?
I'm close. I'm close to closing out. But look, we have another buy come in.
Okay.
At the same price. Now we're at where those buyers came in. The price. We're above where the buyers came in at 80. We're above at 99.75. It's still in other words, we're still kind of a 50-50 probability, aren't we?
Yeah, it hasn't moved that much in our favor in order to increase the probability of the...
That's correct. That's right. So as long as I'm still 50-50, I'm still at risk.
Okay.
But I'm still anticipating that the auction process works, that it rejected the value area low. Now it's going to go test the value area high. Value area high happened to be 2804.
Okay.
And I'm using yesterday's bullish price action I'm getting long versus getting short. Right?
Right.
So not another filtered trade yet. Still only 3 lots. 7. There's another coming in. See if we get another buy to come in. I don't see one yet. So it hasn't really released yet. But we are sitting on top. We're now sitting on top of this previous auction right there at 80.50. Price is up here at 80.01. And I see the seller starting to come back in a little bit and see what happens to him or them or whatever. Because I saw, okay.
There we go.
Okay, so now it went, here's the 50. Now they paid 100 at 01. And then a few moments later, they paid 83 at 1/4. So we're now at 1/4. I can now move my stop. Hopefully this is released. Now it releases. And I'm showing here's at 2804 right here. Here's the value area high. Here's the value area low. Here's the price low. Here's the rejection, the test. The test of that value area low. Price action up. And we're looking to get long at 99. And that's where we get 99 here. We get long 28. 28, well, basically 2,800. And then, okay. So now where is that darn thing? Pause. Okay. So we see that price came in, rejected, got in, struggled with the point of control, now starts to release. Now I know that 2804 is in the cards. Okay, so now I start to move my stop, and I start to follow and hide behind buyers and buyers. Then at some point I get rid of, I think it was 3 contracts, let 2 ride, and just continue.
Okay.
So, again, that process took yesterday's information that was bullish, test the test as it comes down. Here's yesterday's information here. Here's the test as it comes in, right? That's the test. Looking for buyers to come in again, anticipating this to come in. We're not getting in because of this. We're in anticipating this. We want to get in and we want these guys to support what we're doing.
Right.
Make sense?
Yep.
Okay. That's the auction process and using the longer term.
Because we are anticipating, because we know what will happen with the high, I mean, not high, but with a certain degree of probability when it reaches that very area low, and then we kind of anticipate that reject and go higher.
Right.
And in case not, well, then we have lost, 1 or 2
1 or 2
points
ticks
of loss. Yeah.
Yeah. Okay, so you start off with a risk of $12.50, $25, $50. And as it continues to develop, we look to add. So then we're once we've added, we have enough information behind us. We have the test. Here's the rejection. Here's the test, and then we're looking to trade towards the value area high. Okay, and then possibly get this, possibly. But we didn't have to get the low to get in. We're going off of this information. We're going off of the development of the buyers and then the release of the buyers. Or excuse me, the release of the market by the sellers basically giving up. For the moment anyway.
No.
We can now see the same process to the downside. It's tested. It's rejected. We can look for opportunities from the value area high. We would anticipate sellers to come in. We want to get in before the big sellers come in. That's when you get your confirmation. And you get your confirmation in real time versus waiting for a structure to develop or a price chart to develop or something. We're looking for real-time money flow. And that's...
So in that case, we would be looking to trade towards the value area low then.
That's exactly right. So this would be back to the value area low.
Okay.
So we ran out of time today, but you can see that based off of today's information, at the end of the day, we're looking at pretty much a standard deviation bell curve, right?
Yep.
So what does that do? What does that tell us about the previous day's day is that it's consolidating. It's accepting these higher prices. So for tomorrow, I can now say, I'm interested in a long.
Yep.
I can now, because see how thin the volume is from yesterday?
Yeah.
Okay?
Yep.
There's not a lot of value there. There's no value. Today now, I have value. So for tomorrow, I can extend out the value area low and the value area high and then reach for the price high.
Okay. Good.
That's how you do it. Any questions?
Good.
Well, folks, thanks again for joining me on that webinar for Ask Me Anything about order flow trading. And I just wanted to show you the big picture concept, obviously, in the introduction of that webinar. And here's a little idea of how to take that information, a longer term bias, and put it into action on the short term trades. Whether it's a scalp, whether it leads into an investment, that really is how the development of the order flow is happening and occurring. Most important thing that I'll say here is that it's really important. 90%, as I mentioned, 90% of the people out there don't understand even the process of the market. They're just flying blind off price action, and that's how they're getting stuck in these traps. They'll trap in, they'll trap out, and then the trade releases in the direction that you originally thought, but just without you. If you want to stop doing that, feel free to visit me. Info@imftracker.com is how you can email me. You can go to the IMF Tracker website. Also, on a one-on-one basis, I'll take on private mentors, but we have to have a discussion. If you're interested in that, please email me. And again, thank you very much for your interest, and thank you.